Have you ever asked yourself how much money you would actually need to put aside every single month if you wanted to stop working in just 10 years? Not in 30, not in 40, but in only 10 years. Most people hear a question like this and instantly think it is impossible, that it belongs more to fairy tales than to real life, or that they need millions. But what if I told you that the answer is not hidden in some secret Wall Street trick, not locked away in an investment bank, but sitting right in front of you in plain math? The question is not whether it can be done. The real question is whether you are willing to understand the numbers, the trade-offs, and the discipline required. Here is where the mystery begins, because the figure most people imagine is usually far from the truth. Some think you need to invest tens of thousands every month. Others think you need nothing more than a couple hundred. But the real answer lies in how money grows, how inflation eats into that growth, and how consistent you can be. With me until the end, you will know the exact number, down to the last dollar, that can let you buy back your freedom in only 10 years. I will reveal the exact figure later in this video. So take a guess in the comments, and let's start. I'll respond to everyone that guesses right. Now, before we jump into the math, let's think about why this even feels so impossible. For decades, the story we have been told is simple. You work for 40 years, you save a little in your retirement account, and when you are too old to work, you finally get to live. That story has been repeated so many times that it feels like the only path. But ask yourself, is it really the only way? Or is it just the way that keeps you working the longest? Imagine for a moment that you decide today, not 10 years from now, but today, that you want to stop trading your time for money. You sit down with a piece of paper and you start writing. What do you spend every month? Rent, food, transportation, healthcare, little extras. Let's say it all adds up to $3,000 a month. That's $36,000 a year. If you could somehow build a system that generates that income without you showing up to work, you would technically be retired. Not rich in the sense of private jets and yachts, but rich in the sense of time, freedom, and control. That is the target we are aiming for. But how do you get there? The answer sits in compounding, the force that makes money grow on its own. Compounding is often explained with charts and graphs, but let me give you the simple picture. Imagine planting a tree. In the first year, it is small, fragile, and gives no fruit. You water it, protect it, and it feels like nothing is happening. In the second year, still small, maybe 1 or 2 fruits. But by year 5, branches are spreading, the trunk is thicker, and suddenly you have dozens of fruits. By year 10, it's a tree you could sit under, full of shade and heavy with fruit. That's compounding.
The early years feel painfully slow, but the later years explode with growth. And this is where most people quit too soon. They invest for 2 or 3 years, see little results, and assume it doesn't work. But those who push through the quiet years are the ones who eventually wake up to find that the tree is feeding them without effort. Now, imagine if in addition to time, you invested a large sum of money. How much sooner you could retire? And you can do this thanks to YouTube, because YouTube is on easy mode now. Now, let's connect that back to your retirement goal. If you want to stop working in 10 years, you don't have the luxury of waiting decades for the tree to grow. You need to water it heavily, plant as many seeds as possible, and make sure the soil is rich. In money terms, that means you need to invest more aggressively, choose the right vehicles, and understand the effect of inflation and taxes. Here is where many videos stop. They give you a neat chart with numbers growing at 7% or 10% and tell you everything will be fine.
But that's not reality. Reality is inflation quietly stealing your purchasing power, taxes cutting into your returns, and fees dragging you down. If you invest $1,000 a month for 10 years and your portfolio grows at 7%, you might think you will have about $175,000. That sounds exciting, but adjust that for 3% inflation every year, and the real buying power is closer to $135,000. Suddenly, what looked like a mountain is only a hill. And this is why you cannot look at the numbers in isolation. You need to see the real return. Real return is what's left after inflation, after taxes, after fees. That's the money you will actually live on. And the difference between the advertised return and the real return is what separates the dream from reality. Let's make it simple with an example. Imagine you invest in a portfolio that returns 8% per year. Inflation averages 3%. Taxes take another 1%. And fees take 0.5%. Your real return is not 8%. It's closer to 3.5%. Over 10 years, that tiny difference means tens of thousands less in your account. This is why so many people follow the plan for years only to realize they are short when they finally check the numbers. But don't lose hope.
Because while this seems scary, it's also the reason you're here. If you can see clearly where others are blind, you can play the game smarter. You can design your plan to outpace inflation, minimize taxes, and keep more of your gains. So, how much do you need to invest every month to actually retire in 10 years? I will reveal the number in a few minutes because you need to understand the mechanics first. But what I will say is this: the number is smaller than you fear, but bigger than you hope. It is not pocket change, but it is not lottery money either. It sits in that uncomfortable middle ground that forces you to make trade-offs, but also gives you a real shot at freedom. Before we reveal it, let's test a few scenarios. Suppose you invest in very safe instruments like high-yield savings or government bonds at 5%. After 10 years of putting in $1,500 a month, you might end up with about $230,000 before inflation. Adjusted for inflation, maybe $175,000.
That sounds like progress, but it's not enough to retire unless your expenses are extremely low. The income you could generate from that would cover maybe groceries and rent in a small city, but not a full life. Now, suppose instead you invest in something that tracks inflation, like real estate investment trusts. They typically yield 4 to 6%, and rents rise with inflation. After 10 years of $1,500 a month, you could be sitting on a portfolio closer to $280,000 or even $300,000. That gives you around $1,200 to $1,500 a month in income, and that income grows over time. Still not luxurious, but it starts to cover serious expenses. And then there are equities, broad stock market index funds. Historically, they return about 10% before inflation. That's about 7% real return. With $1,500 a month, you could end up with over $340,000 after 10 years. That portfolio could safely generate around $1,400 to $1,600 per month, and that's inflation adjusted. Suddenly, you are not far from the $3,000 monthly freedom goal we sketched earlier. So the question becomes, how badly do you want this?
Because the truth is, to retire in 10 years, you will need to push hard. The math is unforgiving, but it is not impossible. It is simply a trade-off between how much you can invest today and how much freedom you want tomorrow. Now, let's dig even deeper, because the number you need to invest each month isn't just about raw math. It's about psychology, consistency, and how you structure your financial system. Remember, retiring in 10 years is not just an investment problem, it's a behavior problem. The math can be done by anyone with a calculator. But sticking to the plan when life happens, when temptations appear, when markets crash, that is where most people fail. So, let's go back to our target of $3,000 a month in passive income. That's $36,000 a year. If we assume a safe withdrawal rate of 4%, meaning you can take 4% out of your portfolio each year without running out of money, you would need around $900,000 saved to generate that income. Sounds like a mountain, doesn't it? $900,000 in only 10 years. But don't panic just yet, because this is where monthly contributions, compounding, and returns do the heavy lifting.
Especially if you open your YouTube channel, it can do most of the work and make you retire even before 10 years. Let's run some numbers. If you can consistently invest about $5,000 to $500 a month into a portfolio that earns 7% after inflation, in 10 years you will cross that $900,000 mark. That's the clean math. For most people, $5,500 a month sounds insane, completely out of reach. And that is exactly why most people dismiss the idea of retiring in 10 years. They hear the raw number, they feel it's impossible, and they never even try. But here's the hidden truth. There are ways to bring this number down, ways to design a strategy that makes the impossible feel possible. One of the biggest levers you have is lifestyle. If you don't need $3,000 a month, but instead can live comfortably on $2,000 a month, the required portfolio drops from $900,000 to about $600,000. Suddenly, the monthly investment needed shrinks dramatically, closer to $3,700 a month at 7% returns. Still demanding,
but far less than $5,500. If you go even leaner, say $1,500 a month in expenses, then you only need $450,000 saved, and the monthly contribution required drops closer to $2,700. Now, we are in the territory where many middle-income families can realistically play the game. But there's another lever: income growth. If you lock yourself into thinking that your salary today is the only resource you will ever have, then yes, the numbers feel crushing. But what if, over the next 10 years, you build skills, change jobs, start a side hustle, and double your income? Suddenly, investing $3,000 to $4,000 a month doesn't feel like a prison. It feels like a choice. And those choices compound just as powerfully as the money itself. Now, let's pause here because I promised you the exact figure. If you want to retire in 10 years with a reasonable lifestyle, you need to invest between $3,000 and $4,000 every single month consistently into a diversified portfolio, earning around 7% after inflation.
That's the number. That's the truth that most people never hear because they stop asking when it gets uncomfortable. It's not $200 a month. It's not even $1,000 a month. If you want a 10-year timeline, the price is much higher. But the reward is absolute freedom a decade from now. And here's where the mystery turns into clarity, because now you know the number. And knowing the number changes everything. You can design around it. You can cut expenses. You can raise income. You can optimize taxes. You can build a system that funnels money automatically every month. Like a YouTube channel. Most of the channels make that figure every month. So you can open it and start as soon as possible. You can see the target clearly instead of living in a fog. But let me also say this. If $3,000 to $4,000 a month feels impossible, don't quit. Don't throw your hands up. Because even if you can only invest $1,000 or $1,500 a month, you are still planting seeds. Maybe you won't retire in 10 years. Maybe it will take 15. But 15 years is still decades ahead of the traditional retirement path. And the skills, habits, and clarity you build along the way will serve you no matter what. Here's another truth that nobody tells you. The first half of the journey feels the hardest. You are the one carrying the load. Your savings rate drives everything. You see small balances. You wonder if it's worth it. But then, around year 7, something shifts. The portfolio starts creating income almost as large as your contributions. By year 10, the portfolio itself is doing more work than you are. That's when the snowball rolls downhill. That's when your tree is giving fruit
faster than you can eat it. And think about what that means in practice. Imagine waking up one morning, checking your account, and seeing that your investments generated $4,000 that month while you were sleeping. That's the dream we are aiming for. That's the dream worth fighting for. And it is not magic. It is math plus discipline. But let's go even deeper into the psychology, because numbers alone won't carry you through 10 years. The secret is to build systems that make investing automatic. If you rely on willpower, you will fail. If you rely on motivation, you will fail.
But if you set up automatic transfers from your paycheck into your investments, if you reinvest dividends, automatically, if you remove friction from every step, then you don't need willpower. The system does the work. Automation is your best friend because life will distract you. Markets will scare you. Temptation will pull you. But automation doesn't blink. It doesn't get scared. It doesn't decide to buy a new car instead of investing. It just executes. And that is the difference between those who dream and those who actually retire early. Now, imagine the feeling of walking away from a job you don't love. Imagine telling your boss you're done, not because you hate work, but because you don't need the paycheck. Imagine building your days around your passions, your family, your creativity, not around a time clock. That is the prize waiting at the end of these 10 years. But also understand this: freedom has a cost. The cost is discipline today. The cost is delayed gratification. The cost is saying no to some things now so you can say yes to anything later. Every dollar you spend on something you don't really need is not just a dollar gone. It is a brick removed from the foundation of your freedom. And when you start to see money that way, every choice becomes clearer. Is this expense moving me closer to retirement in 10 years or further away? That is the only question that matters. So let's put it all together. To retire in 10 years, you will likely need to invest $3,000 to $4,000 every month consistently into assets that yield around 7% after inflation. If you can lower your expenses, the number drops. If you can raise your income, the number becomes more achievable. If you can do both, the odds tilt heavily in your favor. That's the blueprint. That's the math. And now, the final thought. The timeline is negotiable, but the process is not. Whether it takes you 10 years, 12 years, or 15 years, the only way out is through consistency. The only way out is by planting the seeds, watering the tree, and waiting for the fruit. Most people never start. And only the few who continue long enough ever get to taste the freedom. Which one will you be? I'm sure you want to be the one who takes the shortcut thanks to YouTube. Think about it. Many of the channels of people I've helped make that amount and even more every month. So instead of making sacrifices, you can pretend that income isn't there and automatically send it into an account where you invest. And in 10 years, you can retire without changing a thing about your day.